What if I told you that right now, while most investors are chasing yesterday's winners, there are 10 companies sitting quietly in the market that could potentially double, triple, or even quadruple your money by the end of 2026. I'm not talking about meme stocks or lottery tickets. I'm talking about real businesses with genuine catalysts, like explosive growth trajectories and structural advantages that Wall Street is only beginning to understand. The difference between building life-changing wealth and just treading water often comes down to identifying these opportunities before the crowd catches on. Today, I'm going to show you exactly which stocks have the setup, the catalysts, and the momentum to potentially explode over the next 2 years. And more importantly, I'll explain the specific reasons why each of these companies could significantly outperform the market. This isn't about hype, it's about finding asymmetric opportunities where the potential upside dramatically exceeds the downside risk. Before we dive into specific stocks, let me give you the framework I'm using to identify these explosive opportunities. I'm looking for 5 key criteria. First, a massive addressable market that's growing rapidly. Second, a company that's gaining market share, not just riding the wave. Third, multiple catalysts that could drive the stock higher over the next 18 to 24 months. Fourth, reasonable valuation relative to growth, because even great companies can be terrible investments if you overpay. And fifth, some element that the market is currently underestimating or misunderstanding. When you find companies that check all 5 boxes, that's when you get those explosive moves that can transform a portfolio. Number 10 on my list is Eli Lilly, and I know what you're thinking. A pharmaceutical giant doesn't sound like an explosive growth story, but hear me out, because what's happening with weight loss drugs is genuinely revolutionary. Eli Lilly's drugs Mounjaro and Zepbound are taking the market by storm, and we're still in the early innings of what could be a multi-hundred-billion-dollar market. The data coming out on these GLP-1 drugs isn't just about weight loss anymore. We're seeing potential benefits for sleep apnea, cardiovascular disease, kidney disease, and even Alzheimer's. Every new indication that gets approved dramatically expands the addressable market. Right now, less than 2% of eligible Americans are on these medications. Think about that for a second. If adoption even reaches 10% over the next few years, we're talking about demand that could easily overwhelm supply for years to come. Eli Lilly is investing tens of billions into manufacturing capacity, and they're still struggling to keep up with demand. The margins on these drugs are incredible, often north of 80%, which means every dollar of new revenue drops almost directly to the bottom line. Number 9 is Taiwan Semiconductor Manufacturing Company, and this is my foundational bet on the continued explosion of AI, advanced computing, and basically every major technology trend for the next decade. TSMC makes the most advanced chips in the world, period. They're the only company that can manufacture at the bleeding edge of semiconductor technology, which right now is 3-nanometer processes, and they're moving toward 2-nanometer. Every major AI chip from NVIDIA, every Apple processor, every advanced AMD chip, they all come from TSMC. Here's why this stock could explode in 2026 specifically. First, AI demand is not slowing down, it's accelerating, and every new generation of AI requires even more advanced chips. Second, TSMC is raising prices because they can. Demand exceeds supply for their most advanced nodes, and that's not changing anytime soon. Third, they're bringing new fabs online in Arizona, which will reduce geopolitical concerns and could lead to valuation expansion as that risk premium comes out of the stock. Number 8 is NVIDIA. And yes, I know everyone's talking about NVIDIA, but that doesn't mean the opportunity is over. In fact, I'd argue we're still in the middle innings of the AI infrastructure build-out, not the late innings. NVIDIA has achieved something extraordinary. They've created a platform that has become the de facto standard for AI computing. Their CUDA software ecosystem means that every AI researcher, every data scientist, and every company building AI applications knows NVIDIA's tools inside and out. Switching costs are massive, and the network effects get stronger with every new application built on their platform. Everyone focuses on their AI training chips, the H100s and the upcoming B series. But NVIDIA is also dominating AI inference, which is where you actually run the AI models in production. As AI applications proliferate, inference is going to become a much larger market than training. The company is guiding for continued triple-digit growth in their data center segment, and they're still supply constrained, meaning they could sell even more if they could make more. Number 7 is Constellation Energy. And this is going to seem like a left-field pick, but stay with me because the thesis here is incredibly compelling. Constellation is the largest producer of carbon-free electricity in America, with a huge fleet of nuclear power plants plus significant wind and solar assets. Here's why this matters right now. AI data centers consume absolutely enormous amounts of electricity. Training a single large AI model can use as much electricity as a small town uses in a year. As companies build out AI infrastructure, they're realizing that electricity is becoming a major constraint and a major cost. Microsoft just signed a deal to restart the 3 Mile Island nuclear plant to power their data centers. Google, Amazon, and other tech giants are all scrambling to secure long-term power purchase agreements for clean, reliable electricity. Nuclear is the only technology that can provide massive amounts of carbon-free baseload power 24/7. Constellation owns the assets that these tech companies desperately need, and they're able to sign long-term contracts at very favorable prices. Number 6 is Shopify, and this is my bet on the continued growth of e-commerce and the democratization of commerce more broadly. Shopify powers over 2 million merchants worldwide, from tiny businesses just starting out to massive brands doing billions in revenue. What makes Shopify potentially explosive right now is that they've completely restructured their business. They sold off their logistics operations, which were dragging down margins, and they've refocused on their core platform, which has incredible unit economics. Shopify is now integrating AI throughout their platform in ways that genuinely help merchants sell more. Their AI tools can write product descriptions, generate marketing content, provide customer support, optimize pricing, and predict inventory needs. The company is also expanding aggressively into point-of-sale systems for physical retail, into B2B commerce, which is a massive market they're just beginning to penetrate, and into international markets where e-commerce adoption is still in early stages. What I love about Shopify is the business model. They take a small percentage of every transaction plus subscription fees, which means as their merchants grow, Shopify grows automatically. Number 5 is Alphabet, Google's parent company. And this might seem like a boring pick, but boring can be beautiful when you're getting incredible value. Alphabet is trading at less than 25 times earnings for a company that's still growing revenue in the double digits and has multiple growth drivers that are underappreciated. Let's start with their core search business, which everyone assumes is under threat from AI. But here's the reality. Google's search is still growing. They're integrating AI into search in ways that actually make it more useful and more monetizable, and they have decades of data and infrastructure that give them massive advantages. Their YouTube business is an absolute monster that could be worth more than Netflix as a standalone company, and it's still growing fast with YouTube Shorts competing effectively against TikTok. Google Cloud is the number 3 cloud provider and growing faster than the market, and they're particularly strong in AI and data analytics, which are the highest margin, fastest growing parts of cloud computing. The company generates absolutely obscene amounts of free cash flow, around $70 billion annually, which they're using for buybacks that provide significant support for the stock. Number 4 is Cava Group, and this is my restaurant growth stock that I think could be a massive winner. Cava is a fast casual Mediterranean restaurant chain that's often called the Chipotle of Mediterranean food. And that comparison is actually pretty accurate. They have around 350 locations right now, and they're planning to open 50 to 60 new restaurants per year for the foreseeable future. The unit economics are fantastic, with new restaurants generating strong returns on investment and reaching profitability quickly. What makes Cava special is that they've cracked the code on Mediterranean food in a way that's scalable, delicious, and appeals to health-conscious consumers. The Mediterranean diet is one of the fastest-growing food trends in America, and Cava is by far the best-positioned brand to capitalize on it. Their same-store sales growth is consistently strong, running in the high single digits to low double digits, which means existing restaurants are getting more productive even as they're expanding rapidly. Number 3 is Advanced Micro Devices, AMD. And while everyone's focused on NVIDIA, I think AMD has a really compelling setup for the next 2 years. AMD has been taking market share from Intel and data center CPUs for years, and that trend is accelerating, not slowing. Intel keeps stumbling with product delays, manufacturing challenges, and execution issues, while AMD just keeps delivering better products faster. In server CPUs, AMD now has over 30% market share, and that's heading toward 40% or higher. Every percentage point of share gain in this market is worth billions in revenue. On the AI side, AMD's Instinct GPUs are gaining traction with major customers. They're not as powerful as NVIDIA's top-end chips, but they're good enough for many workloads, and they're significantly cheaper. More importantly, big tech companies want to diversify their chip suppliers to avoid being over-reliant on NVIDIA, which creates a massive opening for AMD, even if their products are somewhat behind. Number 2 is Uber, and I think this stock is dramatically misunderstood by the market. Most people still think of Uber as a ride-sharing company that burns cash, but that's outdated by about 5 years. Uber is now a highly profitable marketplace with incredible network effects, connecting riders, drivers, restaurants, couriers, and businesses. They're generating several $1 billion in free cash flow annually, and that number is growing rapidly. The rideshare business is now mature and profitable with strong margins. The delivery business through Uber Eats is growing fast and approaching profitability at scale. But here's what most investors are missing. Uber is building a super app that's becoming essential infrastructure for urban mobility and logistics. Need a ride? Uber need food? Uber Eats? Need groceries? Uber, the company, is also moving into autonomous vehicles in a really smart way. They don't have to build the cars themselves. They're partnering with companies like Waymo and others to integrate self-driving cars into their network. Number 1 on my list is Palantir, and this is my highest conviction, highest potential upside play for 2026. Palantir is a data analytics and AI platform company that works with government agencies and large enterprises to make sense of massive amounts of data and make better decisions. For years, Palantir was unprofitable, and the market treated it like a speculative tech stock. That's completely changed. The company is now profitable, generating significant free cash flow and growing faster than ever. Their commercial business in particular is exploding, growing at over 40% year over year. The catalyst that changes everything for Palantir is their AI platform. This allows enterprises to deploy AI on their own data in a secure, governed way. They've been running these boot camps where they bring in potential customers and show them how to build AI applications in days rather than months. What makes Palantir special is that they're not just selling software, they're embedding themselves deeply into their customers' operations. So there you have it, 10 stocks that I believe have the potential to explode in 2026. Now let me be crystal clear about something. I'm not telling you to go out and buy all 10 of these stocks tomorrow. Every investor's situation is different. You need to consider your own risk tolerance, time horizon, and financial goals. What I'm giving you here is a framework and specific ideas to investigate further. If you found this valuable, hit that subscribe button and let me know in the comments which of these stocks interests you most.